Ladies and gentlemen, I've been thinking about this module for a while. I've been fantasizing about it. That's too central. I've been looking forward to it. Yeah, that's the right word. I've been looking forward to this module. Now, I'm a bit of a nerd when it comes to tax. In all fairness, I'm actually just a bit of a loser like that. But hey, we all have our quirks. And I've always said that if I was ever, if I wasn't an entrepreneur, if I hadn't started a business, I'd actually be a tax advisor. I find the whole thing very, very interesting. Now, obviously, when I'm talking about a tax advisor, I find tax really interesting when you get into the tens of millions, 100 millions, and even billions. But nonetheless, even at this stage, I love optimizing, tweaking, and even my accountant. I have a very expensive chartered accountant, which we'll get into in a second, whether you actually need something like that, at what stage you need something like that, etc., etc. But even then, they wonder, they're like, we do your books for you. You don't have to double, I basically do everything twice, right? Using the financial planner. And I do that every single month. And I'm going to give you guys that tool in just a second. But yeah, you guys are in for one. You'll probably see in certain modules, I just have that little twinkle in my eye. This will be one of those. So ladies and gentlemen, let's get into tax, accounting, and finances. In today's teaching, we're going to go over the different tax structures, the best way to set yourself up for tax, how I set up my own tax structure, the key KPIs of accounting, how to organize your books, using the financial tracker diligently, how to have a high-level view of your business, or I should say finances, and then trimming the fat. So let's get into it. Let's start off by talking about something that I know a lot of people, especially beginners, really fret and worry about, which is tax structure. So when it comes to tax structure, I'm not talking about and funnily enough, I've actually brought on someone in my network who's an expert in American specific tax structures. So that's in one of the bonus programs that you guys all have access to. But here I'm talking sort of as a general sweep, right? So I'm not talking about the difference between an LLC, C Corp, S Corp, et cetera, et cetera. I'm just talking in general. You've got two routes. Either you can be a company or you can be a sole trader, okay? And really all that means is that you're self-employed. So as a sole trader, you earn money, okay? Because you're self-employed, you earn money, and there's certain things that you can tax deduct, right? And whatever is left, you have no choice, that is taxed, right? Because that's your personal income. Whereas with the business, what that allows you to do, and this makes more sense, especially later down the line, and we'll get into, really what the use case is for it, really what happens when you have a business, right, is let's say as a sole trader, you've got, and I'll try to get Tristan to draw this out, imagine a line item, right? So you've got revenue plus revenue minus expenses, and then what's left after that is your profit, and that profit automatically gets taxed. You don't have any kind of say or wiggle room in it. Whereas what happens in a business is you have your revenue minus your expenses, and what's left is your company profits. Now, you're going to pay company tax on that, but that money can stay in the business. So what that means is you can kind of decide when to distribute that as either a salary or a dividend. And really the benefit of that is you get to be a little bit more lean. And this makes sense, especially once you're making above 10,000 a month, okay? Because the other thing that comes with having a company is you really need a good bookkeeper. And a good one will run you probably $800 a month. But when you're making, $10,000, $15,000 a month, it makes sense, especially because usually a good bookkeeper, especially like my friend Chris, Ecom accountant, which, as I said, you can go watch that separate bonus course. It's not, yes, you're spending $800, but most of the time they're actually going to bring you back far more than that in terms of tax savings, because they'll actually give you advice as well as just doing your bookkeeping. Now, one important thing to remember, and Chris, the Ecom accountant, will get into this, in America, an LLC, it's just a pass-through entity, right? So in America, if you have an LLC, you're not technically a company, right? So you're still really a sole trader, what we'd call a sole trader here in the UK, but it just gives you a layer of protection, right, in terms of liability. So if you're in America, and Crystal gets into this in far more detail, but really it makes sense to have an LLC. There's really no point, there's no reason you wouldn't. Whereas in the UK, there is a difference between having a limited company and being a sole trader, right? Being a limited company is like in America being a C Corp, S Corp, et cetera, et cetera. So if you're sat here and you're like, okay, I have no clients, what do I do? Well, until you get to, unless you're in the States where it just create an LLC from day one, it makes sense. Unless you're in the States, the best thing that I recommend is just operate as a sole trader until you get to around 10,000 a month. Then it makes sense for you to start moving over to a company structure. Now, I'll give you a little context as to the way that I did it. Now, in the UK, you can create a limited company when you're even 16 or 17, but for some reason, I wasn't able to create a business bank account with the bank account I was working with. So I actually decided, and I went about creating my company in, I think it was November. Yeah, I think it was like November of 2017. Anyways, long story short, that company just sat dormant because I decided that I would move to this company model when the next tax season rolled around, which in the UK is 5th of April. So 2018, when I turned 18 years old, I waited until 5th of April. So by the time that I moved over to a company structure, I was literally making multiple 5 figures a month for my agency, and yet I still was operating as a sole trader. Now, when the new tax season rolled around, I moved over to this new company structure. And the other mistake that I made is, 2018 was just kind of the inception of Gray Agency, or really it wasn't Gray Agency back then. It was really just more of a course business. It wasn't this massive behemoth education software hybrid with a crazy expensive R&D costs and team, etc. It was really just a program. But anyways, I decided to create 2 different companies for that. And that came with a whole host of nightmares. So I ended up just striking off one company and just using both. And, both businesses kind of fell into that same category of like consulting, agency services, et cetera, et cetera. The reason, it's a bit of a nightmare is because you need to file 2 tax returns. You need to have 2 sets of cards, and all in all, it's just very, very complicated. So I recommend for any of you guys, if you happen to have, any other businesses on the side, if possible, if you can bundle it together, it makes life a hell of a lot easier. If not, then, you just got to keep it separate, and that's just the way it is. Now, if any of this sounds scary to you, don't let it be, right? Because here's the thing you need to understand. The government, like if you're keeping track of your books, the government is happy. Like the government will never come after you, especially at that small of a scale, especially if you're filing your taxes. The people that they are going after are the people, and by the way, there's so many people out there, they're just like, oh, the government will never find out, I just won't pay taxes, right? And there's so many people like that. Or there's companies that have millions, right? They have millions that they should be paying in taxes that, through some weird backdoor methods that aren't legal, they've just been avoiding. And, you need to understand that these tax officers, they need to assign their resources correctly, right? So if you've signed 5 clients, right, and you're like, oh my God, I haven't signed up for tax, like this is stressful, don't worry, right? You can always retroactively go back and do it. And as long as you keep an account of your books, then an accountant will help you. Now, remember when I said that a good accountant will probably run you around $800 a month, $700 a month, $900, somewhere within that vicinity. But that's if you have a company, right? And that's so they can do your monthly bookkeeping, et cetera, as well as give you tax advice. If you go to an accountant and you give them your personal a tax file, which obviously you only need to file your personal taxes once per year. And obviously that is the case if you're, you go for the sole trader route rather than the company route. If you go for that structure, then, for a bookkeeper to sign off on things, it'll cost you like $300 to $1,000, right? It's not super expensive for them to do your year-end personal taxes. So as I said, as long as you're collating your files correctly, then you have no issues. And also bear in mind, in most countries, like for example in England, you don't actually have to pay any taxes on the first £12,000 you make profit. So let's say, for example, you earn £15,000 in revenue from your first 4 months of running an agency, but you have some expenses. Like let's say this program is a business expense, of course. And even if you didn't pay for it on the business card, you can retroactively go back and claim it as an expense. Or, as I said, as a sole trader, obviously you don't really have a business card, but we'll get into that in just a second. Why, even though you're still a sole trader, I recommend you actually just have 2 separate cards. So in that way, it's kind of separated, right? It's technically not a business card, but it's still 2 separate cards, and you know which one is business, which one you use for personal. But even if you started a company and when you paid for this program, you weren't a company, then at least in the UK, obviously look at your jurisdiction. But in pretty much most places, this program is considered a cost in order to get the business off the ground. So then the company, as in your new company, pays you that back. Right? So then that way you don't, you get some tax benefits from that because it's tax deductible now. So as I said, let's say in your first 4 months, you earn £15,000 as an agency. And let's say you have £3,000 in expenses, right? That means you only made £12,000 in profit. And by the way, another expense could be, for example, a computer. Now, obviously, as I said, remember, look into your jurisdictions. There's stuff that I didn't think I was ever going to be able to business expenses, and I just couldn't, right? But let's say you needed a mic for sales calls. That is 100% a business expense because you're using it for the business. Let's say you need a computer, right? These are all business, even a chair to work in, right? These are all business expenses, and in most jurisdictions would fly as a business expense. So you made $15,000 in your first 4 months. You spent $3,000 in business expenses, like let's say including this program, and you're left with $12,000. You don't actually have to pay, you didn't have to put any money aside for tax on that, right? So really all that you have to do, and I'll show you right here, it's very, very simple tax, because as I said, you can always I really need you to get through this get this through your head. When you are very willing to give the government money, when you show, and by the way, that's a lot, that's one of the biggest things as well when it comes to tax audits, which I'm just gonna be honest with you, probably no one in this program will have to deal with. You really only have to start dealing with tax audits if you don't file your taxes. Second, by the way, the biggest thing, and especially as I said, once you get past like 10K a month, the biggest benefit of having an accountant is when you have an accountant, the chance of getting audited goes down something by like 99%, right? Because the government knows that, hey, this accounting firm would not sign off on the books. They would not sign off on your financial statements for the year if there was something shady going on, because then that reflects on, they keep a tally of all the different accounting firms and, how many audits they've had, and, and also just how heinous the, whether it's tax evasion or tax avoidance, or, how finely their clients, walk the line. So that's another big benefit of having a chartered accountant, is you're really not going to get audited. So if you obviously file your taxes, which, of course, I'm showing you how to do here, and I'm showing you like really the steps in order to make that happen, and a high level view of it. And especially later down the line when you work with a chartered accountant, especially if you work with a chartered accountant, even if it's just for your personal financials, by the way, and you're making less than 2 million a year in revenue, realistically, you're not going to get audited, right? Because the thing is, let's say even you business expense something that you shouldn't have, right? Just but through genuine mistake, right? You're like, oh, I thought I could business expense that. They come to you and let's say they've reclaimed 4,000 in tax that you should have paid and you didn't. Like, what's that compared to a company that, literally has 20 million in unpaid taxes, right? So you need to understand where they're putting their resources, right? So as I said, another big thing with all this stuff is good faith. The government and these tax services, IRS, HMRC, etc., they look at good faith, right? Like, I can tell you, for example, there was a specific, and this is why you can always go back. There was a specific case where I had something like 60,000 pounds in VAT unpaid, because for a year, we moved over to a different billing model, this for the education company. And we realized for 6 months, there was an issue with some of the UK customers specifically. So for a year, I hadn't paid tax that I was meant to. This is just a pure mistake on my accounting firm's part, because it said, running all the businesses I run, it gets very, very complicated with billing and this and that. So we just went to HMRC and we're like, hey, by the way, like, we noticed this thing. I actually have like an extra 60,000 pounds to pay in tax. And obviously that's still taken as a, I didn't pay that tax on there, technically, I didn't pay the tax, and that's obviously a big no-go. But because they saw good faith of like, hey, we brought this issue to you, we actually didn't realize this, and there was no issues, no fines, no interest accrued, no slap on the wrist, nothing. They were like, okay, awesome. So as I said, as long as you're keeping your ducks in a row and you're keeping your books all aligned, then you have historical evidence to go back and be like, hey, I kept all invoices and I put them all in a Google Drive. I kept all receipts. And as I said, I'm just being honest with you. No one in this program will get audited. Like, it's just, as long as you follow the stuff, it's just, the probability is like a 0.001% chance because of the scale of our business, because everything's online. The other thing you need to understand, they're looking more at businesses like watch dealers that deal with a lot of cash, or like, clubs and like these sort of industries, right? Those are the businesses they're really looking at. With us, it's all online. It's so easy to see. And our files are so easy to do. So, this is just kind of like this is really just a sort of high level view. So all you need to know is, when does the tax season end? In the UK, it's the 5th of April of every year. And then you actually have to pay your tax on the 31st of January the next year. So you actually have 9 months to pay your tax. That's the other thing people don't realize, is when you file your taxes, you don't actually have to pay then. But as I said, your accountant, and when I say accountant, even if you're filing as a sole trader, and you're paying anywhere from whatever, $300 to $1,000 per year for that, they're gonna run you through the entire process and stuff like that. Okay, so the first step, like the main thing that you need to do today, if you don't have any clients, or maybe you've signed 3 clients, but you're like, damn, like I haven't signed up as a sole trader, or like I haven't signed up for tax, guys, do not worry. As I said, you can retroactively always go back. Just the most important thing is just staying organized. So what you need to do now, everyone here, and this also applies if you're, this also applies if you start a company and stuff like that. But I'm sure you've already done this if you've started a company and working with an accountant. You just need to go online to whatever your government service is. You need to basically sign up as a online taxpayer, and usually in most countries, what's called is a unique taxpayer reference, right? So UTR. So they'll give you one of that, and that's basically like your ID, so they know that, hey, this payment has come from this person has filed their taxes, and this just puts you on their system, right? And that's all you need to do for now, right? Because as I said, whatever you're earning now, realistically, and let's say even if you're watching this and it's early March, right? and you sign no clients, and your tax season ends in a month. Well, even if you sign 3 clients, right, you're probably still not going to make 15,000 in the next 30 days. Or I don't know, maybe you will actually, maybe you will. And then you have a tiny bit of tax to pay for this tax season, but then you don't need to pay it for another 9 months. So as I said, this is really where an accountant comes in and gives you everything. But my job right here is not to give you the nitty gritty of when you pay tax. And as I said, for those of you guys in America, and you can watch the bonus program that I created with Chris, the e-com accountant, and that'll give you timelines. And maybe even if you're not from America, it's still very useful to see like, hey, you filed this date, you pay this date. And, even just looking at the American tax system, which, a lot of other ones in terms of filing and stuff like that is very similar. That'll give you a lot of context. But my job, as I said here, is not to like give you the specifics, because as I said, Germany is different, Italy is different, Spain is different, the UK is different, and they all have slight different discrepancies. It's not like a massive shift or a major change. My job right here is really for those of you guys that are freaking out about tax and are like, oh, I haven't done this and I haven't done that. Guys, remember, the government is over the moon that you are so eager to pay tax, right? And as long as you have that goodwill, and as long as you keep your ducks in a row, I mean, you could go back and just be like, you could literally go back like 3 years back and be like, oh, there's this tax I didn't realize I needed to pay. And as I said, as long as because they really take this into consideration, as long as there's goodwill, right? And there's good intention and they can see that it was an honest, genuine mistake, then there's no issues, okay? So yeah, let's move on. Now, what I'm going to show you today is I'm actually going to show you the organization of things, right? So how you keep track of your receipts, your invoices, et cetera, et cetera. And then I'm also going to show you the financial planner. Now, when you go to an accountant with these 2 things, they are going to love you, right? Like when I first started working with my accountant and we actually backdated for the last year's personal income tax, they were just over the moon, because you're their sort of dream client who has all their ducks in a row, and really they just need to organize it, put it all together, and then send it off and file it. Now, your next question is, you might be wondering, Eman, how much, like, let's say I'm getting to a point where I'm making, 8K a month. And, so far this year, the business has done, whatever, 75,000 in revenue, maybe, 22,000 in expenses. Like, how do I know how much to put aside? That's very simple. Just look at your country and go look at a tax calculator, right? And what you'll find, and also look at tax brackets. And what you'll find is that different tax brackets at different stages, right? So in the UK, for example, you'll pay nothing on your first 12,000 pounds in profit. Remember, that's revenue minus expenses, any expenses that is included in there. And then for the next, I think up until from 12,000, I believe it's actually 11,000 now, up to, I think it's something like 42,000, you pay, I forget what it is. I think it's 20% or something like that, right? Don't quote me on this. And as you start to go up and up, and then from 45,000 to, or I think actually maybe it's 12,000 to 25,000, right? But let's just say like there's a bracket there, and then from X amount to X amount, you pay a higher rate, and then from X amount to X amount, you pay a higher rate. But also bear in mind, when you join that higher rate, that doesn't mean that all your taxes backdated. Now you have to pay more tax on those. It's once you get to that higher band, anything you earn, like up until 45,000, like let's just say hypothetically, you'll have a certain tax rate that you pay. Once you hit 45,000 in income, that next amount that you earn is taxed at a higher rate. Okay, so that's basically the way it works. It's very, very simple to kind of plug in a calculator. And when you diligently follow the financial tracker, you're going to be able to see over the space of the year, okay, I earned this next tax bracket, so now I need to put aside a little bit more, right? And it's very, very simple. So ladies and gentlemen, let me show you an example. Like this is direct from the UK government website, right? So what I did was I plugged in my numbers. I said that I made 75,000, right? So that, let's say for example, 75,000 profit, like that's my actual income, could be as a sole trader from 100,000 in revenue from the business and 25,000 in expenses. Okay. And then I also told them, I'm not paying Scottish tax. I'm not over the pension age, et cetera, et cetera. So you can see right here, the tax-free allowance is actually 12,579. So the taxable amount is 62,000. This is the only thing I pay tax over. And you can see right here, my income tax comes out to 17,000. And in the UK, we have something known as national insurance. So that comes out to 5,000. So this is my taxable amount, 22,000. Right? So you can just go ahead and you can just, even at the end of every single month, you can just tally up how much you've made that here. You can plug it in and then you know exactly how much to put away. And it really is as simple as that. Now, ladies and gentlemen, as I said, you can use that method of like just tallying up how much you used through the entire year. Or as I said, you can also use that brackets method. So once you find out what bracket you fall into now, then you just set aside, if your bracket now, you have to pay 35% and you're a sole trader, then, whatever profit you have, just set aside 35%. So it's really as simple as that. So let's get into accounting 101. Now, what we're going to get into is some key concepts when it comes to accounting. Now, there's two sort of models when it comes to accounting. There's cash and there's accrual, right? So cash is literally like what came into your account, and accrual is accounts receivable, right? So let's say you have a commitment with a client and like there's certain revenue, but that revenue hasn't been paid, right? Now for our financial tracker and for our own books, we'll do cash. Now in different countries, there's different models. And in fact, in the UK, you can actually file as cash or accrual. Like you have the choice to do one or the other, right? So for now, don't worry about that because your accountant will help you with all that stuff. For now, we're just going to use cash method. And also the thing is, if you're a sole trader, you really only need to use cash because it's only the income that came in and the income that came out. So getting into the main KPIs of business, revenue. So revenue is the total amount of income generated by the sale of goods or services related to the company's primary operation. Revenue, also known as gross sales, is often referred to as the top line because it sits at the top of the income statement. So we will still refer to this as revenue, but bear in mind, we're accounting for cash collected. So when I say revenue, I actually mean cash collected. Next is expenses. An expense is the cost of operations that a company incurs to generate revenue. Common expenses include payments to contractors, equipment, software, and education/training. Then we have profit. Now this is a financial gain, especially the difference between the amount earned and the amount spent in buying, operating, or producing something. And then some other terms, there's terms like gross profit, which is profit after tax. We have gross margins, which is margins on revenue minus COGS, so cost of goods sold, like what it actually takes to deliver that service. Then we have net margins. Now this is margins on revenue minus all expenses. But you really don't need to worry about these for now, right? A B2B service provider business with low client count like ours is extremely easy to account for. Ladies and gentlemen, we don't run an e-commerce business. Like I honestly cannot stress how easy it is to do our accounting. Okay. It's very, very simple. With most of us, we'll have anywhere from 3 to even at a max 20, maybe 30 clients a month that we need to jot down. Those are our revenue sources. And then, maybe we'll have between 10 and once again, maybe 30 expenses. It's very, very simple. And you'll see that with the financial tracker. Next, let's talk about organization and workflow. So you're going to have a Google Drive and in there have your, make that your tax folder. Okay. And inside of that, as I said, or you have your Google Drive is kind of the place you store everything, and you have your taxes folder. And then you have your year/month. So you'll have, let's say you'll have 2022 and then you'll have 2023, right? If you're in the year 2022, or the other thing you might have, and I guess the other thing you might have is, for example, in the UK where it's like 5th of April to 5th of April. So you might have, in this case, 21/22 tax season. So with that, that you're talking about 5th of April 2021 to 5th of April 2022, and then you have your 22 to 23 folder, right? And that's obviously for your taxes from 5th of April 2022 to 5th of April 2023. Okay, so you'll have your Google Drive. That's what you use because it's very easy to share with your accountant when the time comes. You've got your taxes folder. You have your year/month, right? So you'll have that tax year, and then you'll break it down into the months. So like between that tax year of 2022 and 2023 in the UK, you'll have April of 2022. You'll have May, June, July, et cetera, and that'll go on between those dates. Then inside of each month, you're gonna have your revenue and you're gonna have your expenses. And the only thing you need to put in your revenue is just all of the because obviously you can print out all of the invoices that you send via agency flow. All you need to do is you just need to take out all those invoices that you send that month. Via agency flow, and you just put it in there, and there you go. That's your revenue. And it really is as simple as that. And, maybe with some clients, you've sent them a bill and they had to pay with Bankwire. Obviously in agency flow, you have the ability to mark all that stuff as paid. So as long as there's an invoice attached to it, there's really no issue the way it actually comes in. That's really not an issue. Then you have your expenses. Now with your expenses, very simple. Anytime, like let's say for whatever reason, you even take, actually not for whatever reason, this is very common. You take your client out, even though we run remote businesses. If a client is in your country, country or your city, and you visit them, and you guys go to a nice cigar lounge, is that obviously check your jurisdiction and see what you can and can't do. But in most places, client entertainment, that is considered a business expense, especially when you run a service-based business. Other expenses could be, for example, the receipt of this program. Bear in mind, guys, we get this a lot. Like you don't need a tax receipt, right? On our side, we pay all the taxes, and especially the way that my company is structured now, where, we're no longer in Europe. There's no VAT to reclaim or anything like that. So guys, just bear in mind, with this program, the receipt that you receive, that's all you need. You don't need a tax invoice or this or that because there's no additional information, right? And as I said, there's no like sales tax or value added tax that you can reclaim because of with the way that our company is structured now, no longer being in Europe. So as I said, all you need to do is just put the receipt of this program, which you receive when you purchase, and you just put that in there. And then let's say you buy a microphone, you just put that Amazon receipt in there, and these are your revenue and your expenses, and that's how you build it up over time. And ladies and gentlemen, it really is as simple as that. And when you take this to an accountant, it'll be very quick and very easy for them to then basically go through all of this, apply it all, and do your books in a very quick, diligent manner. So let's talk about the financial planner. So ladies and gentlemen, I complete this planner on the first of every single month religiously. Doesn't matter what the circumstances are. And one of the amazing things about having an agency is the books are so simple, right? It's so easy to fill out this financial planner. This shouldn't take you more than 30 minutes to an hour at the beginning of every month. And it gives you such a beautiful high level view of where your finances are at. Now, I used to use, I messed around with QuickBooks and Xero and all this stuff, and I just got so frustrated with it. I built my own financial planner inside of Google Sheets. And that was probably around 2.5 years ago. And obviously since then with the platform, we've just taken everything to the next level. So now I've been able to add even more features that I would have wanted inside of Google Sheets, but that you can only build when you have your own proprietary software. So as I said, your accountant will manage all your books and do everything, right? Or at least sign off on all your books. So technically you don't need to do this, but for you, the main reason you do this is from a cash perspective, like cash collected minus revenue, is for you to really understand like where, what is the health of your business at the moment. So that is why you do this religiously. So that way you can watch the money like a hawk, and you do this on the first of every single month. So ladies and gentlemen, this software really is revolutionary. So let me give you a tour of it. So ladies and gentlemen, as you can see, all you have to do is just go to the tools section of the program, and you'll be able to find the financial planner. So here on the side, you'll be able to toggle the year. And obviously, when you go to a new year, everything's fresh, right? And we'll actually go ahead and we'll save this for you, so your data never gets lost throughout the years. So here you have your year summary. Now, obviously, if I filled out all of this, you would be able to see each month's revenue, right? Expenses, net cash flow, the dividends released, the retained earnings, which means the net cash flow. So basically your profit minus the dividends you release, the money that you take out of the company, your opening balance and your closing balance. So between the months, you'll actually be able to see green if you made more money than last month, and you'll be able to see red if your expenses have gone up. So obviously you want to see green with your revenue as much as possible. You want to be making more money, and preferably you want to be seeing green as well with your expenses, which means your expenses have gone down. And obviously you want the same thing with green when it comes to your net cash flow. So on the right here, you'll be able to have your year summary, and this gets pulled in from all of this data, right? So this is the year summary. Now coming into the month view, so you can see right here, for example, January, you've got, client A who paid $2,800. And by the way, if you ever need to delete anything, you just click here and you press delete, right? So you've got client A who paid $2,800, you've got client B who paid $1,900, and then you've got client F, right? I'm just using this, December, right? You can see right here, it's January, DES. So I put December PF, so performance fee, right? And that comes out to 4,781, right? Never really a round number when it's performance fees. Now, if you want to add another one, let's just say client C, right? You just go ahead and let's just say they're $2,500 a month. You just go ahead, you add that, very simple, and you can see right here it gets added up to the tally. Then you go ahead and you put your softwares. So with me being a UK company, most of the stuff gets charged in dollars, so I just convert it, right? So let's say ClickFunnels, £75 a month. Let's say Agency Flow, let's say you've got for you, and you've got a bunch of contractors as well. Obviously the base plan is much cheaper than this, but let's say £72, converting from dollars. Calendly, £12. The other thing to bear in mind is if you're in the US, you can change this to dollars. Obviously, this dollar sign will also reflect if you're paying in Canadian dollars or Australian dollars. Like, it works regardless, right? And then here you can go ahead and put euro. And depending on some of the response from you guys, if there's more sort of currencies you want, then obviously we can go ahead and add more. That's one of the benefits of spending this much on a platform and having the team of developers I do, et cetera, et cetera. But as I said, I'm in the UK. So if you ever get charged in different currency, then just check what it reflects like on your bank statement, and that's the actual amount that you put in. Then let's say staff right here, let's say you have just one contractor to deliver 12 grand a month in service, right? And you're paying him 1,800. And let's say he's paying, working with you per month per client, or let's just say you're at an agency where, let's just say even you have someone full-time, right? For 2,800, he lives in whatever, Serbia. And you can see right here, whenever I change something, or let's say I remove, I go ahead and remove here, you can see that it removes expenses. So let's just say, let's put in again, Chris, 3,300. Boom, easy. simple as that gets added. Bear in mind, guys, obviously building a software and filming this stuff months out from when it actually gets released to the general public, there's always some glitches. So I did notice that it's not tallying up the expenses on the other tab, but obviously all this stuff will be sorted by the time you launch. So you can see on the right side, we've got revenue, we've got expenses, we've got net cash flow, which is basically your profit. And then here at the end of the month, if you're working with a company structure, and let's say at the end of the month you take out $2,500 in dividends, you'll go ahead and pop that in, and then that changes your retained earnings, your opening balance. So let's say in your bank account, whether that's your business or your personal, you start off the month with 27,800, right? And then let's say you ended off the month with whatever 30. Roughly what would that be, like 35,000, let's just say, or 36,823, right? And you just go ahead and you put in what amounts. Bear in mind, like for example, especially if you're using Stripe, sometimes you'll earn that money that month, but it won't come in until next month because there may be a 2 or 5 day payout window, right? So that's 1 month, and you come in and you do next month, and you basically just go through all these months as such, right? And then basically you come back, and obviously, guys, this is a demo account that I'm using. So yeah, on mine, it looks totally different. And yeah, basically you'll be able to see your year view. Actually, let me go back to Financial Planner. The other thing that you can do is, you see we've got one tab for revenue, and this will just keep going down, right? So even if you have 30 clients, this works. And then you've got these tabs for expenses. Now I put software, staff, and other, but you can actually change this. So let's just say, I don't know, for whatever reason, you want to go ahead and you want to change this to something else, other. For now, I'll just put miscellaneous, right? But you can just go ahead and change these expense tabs to whatever you want. And yeah, that's pretty much about it. And then, every single day I look at my year view, right? I look at my year view and I just look at the numbers, and I don't judge anything except for mainly the expenses, right? Because that's the thing that you really want to watch like a hawk, and you want to make sure that you're on top of your expenses. So ladies and gentlemen, this is the Financial Planner. As I said, when you spend 18 months building out a custom platform and proprietary software and basically all the other crazy shit that we've done with my developers, obviously there's some little bugs here and there, but as I said, by the time that you guys see it, which is a few months out from when I actually film this stuff, obviously everything is sorted and good to go. So yeah, guys, that's the Financial Planner. And who knows, maybe for people even watching this a year after it's released, we're always optimizing this stuff, always taking your guys' feedback into consideration and improving this stuff for you. So ladies and gentlemen, this is a printout that's available down below. As long as you're never sacrificing client experience, the only thing that matters in this business is profit. $1 saved is $1 earned. So every month, make sure you're trimming the fat. So today's action step is set up as a sole trader / LLC. If you haven't already, create that folder structure in Google Drive and the Gmail filters. That's one thing I actually think I forgot to mention, the Gmail filters. So whenever, there's two things I actually want to mention here, Gmail filters as well as credit cards. In terms of filters, what you can do is, well, here's the thing. It depends on how many expenses you have. So for example, there's stuff that has been an expense of mine for years and will continue to always be. For example, like ClickFunnels. So I have it and a filter automatically said that when something comes in from ClickFunnels, it's automatically tagged in my Gmail as a receipt, right? For you guys, you probably won't need to do that. So in your instance, just make sure you have like a separate folder, or I think they are called tags in Gmail or something like that. So that way, when anything's a receipt, you can tag it as a receipt. So then that way you can always go back and you can see your receipts tab. The other thing is on your phone, make sure that you create a receipts folder. So anytime you need to, you're physically out somewhere, and let's just say you buy something at a store for the business, or as I said, you're with a client or something like that, you take a photo, right? And then that goes into your receipts folder. That's one thing I want to mention. The other thing is credit card. Now, one of the things I wish I had done way sooner was actually, create a credit card. Now I use American Express, and it's amazing because I never have to pay for flights ever again. Now, when I first got started with American Express, I got a business platinum card, right? For me, it made sense to do that. It's something like, $700 a month, a year or something like that. So yeah, like $700 a year. So it comes out to whatever, like $60 a month or something like that. Anyway, so for me, it was worth it. And then I waited a few months, and then I got a personal gold Amex because I didn't want to pay the $700 fee for me personally, because I really wasn't spending that much money. And I did that really just to improve my credit score. And then I ended up getting a personal platinum as well for some of the larger, for example, watch purchases, et cetera, because that platinum card is actually a charge card. It's not a credit card. So with my platinum, I have 150,000, like that's legally, or at least in the UK, like the most you're allowed, someone's allowed to put on a transaction without pre-approving, right? Like calling them and going through a process. So I can put 100,000 pounds, and I can do that multiple times actually, on one transaction. Whereas with my personal credit card, my limit's like 15 grand a month or something like that. Like it's ridiculous. Or 15 grand, and then I need to pay it off, and I can do that multiple times a month or whatever. But anyways, long story short, if you are first getting started, I definitely do recommend a credit card if you can use it responsibly, which I'm sure all of you guys can use it responsibly, and also try to get one that has no fee. When I joined the Gold Amex, they actually did a promotion where in the first year you had to pay, there was no fee to pay, and then after that it was 180 pounds a year. So it made total sense for me. So that's just two things I want to mention. So ladies and gents, I hope you guys have enjoyed this module. Make sure you go back and rewatch this if anything was, you didn't really understand. And then also go and make sure you watch that bonus program from Chris. We put a lot of time and effort into that, and he very very kindly took the time out of his day. I mean, he runs the biggest accounting firm, especially and specifically for e-commerce owners in the US, as well as now he's working with a lot of agencies as well. So basically, that's one of the things that you want with your accountant, is you want to feel like warm and fuzzy and like they understand you. So he very graciously took the time out of his day to record all those modules. So even if you're not in the US, I think it could be very valuable for you just to see from a high level structure, and from literally the founder, like the director of a massive firm that works with online businesses like ours, how they go about dealing with things with their clients, because they have clients literally making $1 million a month, $2 million a month, $3 million a month from e-commerce stores, and then they have agency owners doing $100K a month, and they've got agency owners doing 10 or sometimes even 6 or 7K a month. So ladies and gents, I also recommend you go ahead and watch that just to get a bit more context. So I hope you guys enjoyed this, and I'll catch you in the next one.